Prepare for oil and dividends to flow with ConocoPhillips stock. ConocoPhillips raised its third quarter oil production outlook. ConocoPhillips is trading at a reasonable valuation. Investors might consider ConocoPhillips stock for conventional energy market exposure. Let's dive in. Here's why you should buy ConocoPhillips stock for its value and yield. Welcome to Timely Investment Research. As the petroleum market tightens, enterprising investors might want to get exposure to conventional oil and natural gas energy stocks. One way to express your view that oil and gas prices will remain elevated is by holding shares of ConocoPhillips stock. We've already identified ConocoPhillips as a dependable dividend payer, and we're sticking to that view today. ConocoPhillips might not have met analysts' earnings expectations, but the company is a powerful producer that's not overvalued on Wall Street. Bad and good news about ConocoPhillips. If you're a stickler for earnings beats, then what we're about to tell you might be a deal breaker. For the second quarter of 2023, ConocoPhillips reported $1.84 per share in adjusted earnings, missing the analyst's consensus estimate of $1.95 per share. This, plus the possibility that volatile oil and natural gas prices might decline in the near term. Nevertheless, there are some positive points to observe with ConocoPhillips. First of all, ConocoPhillips delivered 1.805 million barrels of oil equivalent per day in second quarter 2023. That's a quarterly record for the company. Second, ConocoPhillips raised its full-year production outlook to a range of 1.8 to 1.81 million barrels of oil equivalent per day. The company's prior guidance called for 1.78 to 1.8 million barrels of oil equivalent per day. In addition, ConocoPhillips completed $1.3 billion worth of share repurchases during the second quarter. So despite the earnings miss, the overall picture looks bright for ConocoPhillips and its shareholders. ConocoPhillips stock isn't too richly valued. For much of 2023's first half, conventional energy stocks underperformed other sectors, such as technology. However, as the oil price climbed this summer, ConocoPhillips stock rallied from $100 to $117. This doesn't mean that the shares are too expensive to consider buying now. Indeed, value-conscious investors should appreciate ConocoPhillips' trailing 12-month price-to-earnings ratio of 11.26x, which isn't outlandishly high in today's market. Income-focused investors can relax and collect ConocoPhillips' reliable dividend distributions. Currently, the company pays a forward annual dividend yield of 2.05%, so consider that a nice bonus for long-term shareholders. And, by the way, ConocoPhillips stock should appeal to investors seeking exposure to the natural gas market. Recently, ConocoPhillips inked 20-year deals to receive a collective 2.2 million tons of liquefied natural gas per year from Mexico Pacific's Saguaro export facility. Thus, if liquefied natural gas demand increases, ConocoPhillips and its shareholders could benefit. ConocoPhillips stock, an intriguing oil and gas play. Some financial traders won't choose to invest in ConocoPhillips. They might be concerned about the company's second quarter earnings per share miss. Or they may not expect oil and natural gas prices to stay elevated. On the other hand, ConocoPhillips should appeal to investors who focus on dividends and/or valuations. Besides, ConocoPhillips is clearly an ambitious oil and gas producer. Therefore, ConocoPhillips stock should be appropriate for some people seeking returns in the conventional energy market. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.